Hey, welcome to the Airmere Roundtable. Today is the 2nd of March, 2022. And special guest, Amy Meissner is with us again, going to talk to us about the A14. So welcome back, Amy.
Oh, good to be back. Thanks, Tom.
You want to do the disclaimer or you want me to just kind of
You're
breeze?
good at it. You go for it.
Okay, just normal disclaimer, the Airmere Corporation and Amy Meissner are not broker-dealers or investment advisors. It's for educational purposes only. Options, futures, currencies, bonds, all that stuff involve risks are not suitable for all investors. Past performance is not necessarily indicative of future results. And you can read the whole thing if you pause the recording or go to the bottom of any of our web pages. So with that, Amy, I'll turn it over to you. I'll mute myself so there's no background distractions or anything, but I'll be here for the whole thing.
Okay, great.
All
All
right.
right. Well, welcome everyone. Thanks for joining. For those that are joining live and for those that are watching, thanks for watching. So basically, usually I don't do these performance reviews. I usually do them like at the end of a quarter or the end of a year or end of like 6 months or something. But since we've had so much volatility lately, I thought I would do one a little early and to kind of go over for those who hadn't subscribed to the A14 Broken Wing Butterfly Weekly Strategy workshop that I did, just kind of let you, show you guys how it's been performing over these last couple of months of, some pretty big moves that we've had in the market. So that's what we're going to talk about today. And just for those of you who might not know who I am, just a quick little bit about me. I began trading stocks and options in 1995, and I've been trading full time since the since about 2006. I specialize in high probability option strategies. My main goal is to make a monthly income, and I'd like to obviously keep consistent returns coming in so I can make a living at it. And so that means that I have to deal with a variety of different market environments, whatever the market throws at me. So I tend to create strategies that can handle different variety of markets and don't require me to sit in front of my computer all day as well. So I've done speaking engagements and presentations for numerous trading clubs and educational trading services, and I've done trade alerts and workshops and video courses that are out there. Right now, just the workshops and video courses. I don't have any current trade alert services, but I usually do them here at Airmere. And we have the A14 workshop here at Airmere. So if you haven't already checked that out, you might want to check that out. So as you guys know, if you've seen any other presentations about the A14, I launched this in December. Or was it December, Tom? I think it was December. It was November last year.
It was December. Yep.
Early December last year. And it kind of, and it basically culminated from some trading tactics that I had been playing around with for about 15 months at the time. So of my own personal trading. And what I came up with is this simple, it's basically a very high probability short-term weekly. So everything's done every week. So it's a weekly strategy. It's suitable for small or large accounts, so it's easily scalable. If you have a larger account or you want to trade for a larger amount of your portfolio. And I wanted to create also something that is capable of achieving high returns very quickly. That's, hence the weekly short-term nature of it. But I wanted it to still be high probability so that I can get a nice, quick growth chart. And as you can see here, for 2021, this is for last year, all of last year, we've had, some really good success. We had some pretty, wild times in the market last year as well, both up and down a little bit, right? So like I said, I basically developed this strategy based on a combination of variety of trading tactics that I had been trading myself in my own personal accounts, and that I began testing in September of 2020. So I began this live testing in my own. I opened up a small account, or I had a small account that was already opened up for the boxcar trade, actually. And I used that, I transferred it over and basically used that to test a lot of these, kind of like a testing playground, right, of all these different trading tactics and in a short-term environment, and began developing kind of more of a nuanced A14, like, more of the way I like to trade my kind of style of trading. And so I, over about 15 months, I actually, using a variety of these tactics, had done a fairly good net profit. I made about 229% net profit. That's after commissions and slippage and everything, from September 2020 through November 2021. So pretty good profit. And along the way, speaking to some students and some people, and they kept asking me, do you have, do you have like something like any kind of rules based on this? Can I, I want to see this. Are you going to have a class? Are you going to have a video course? That kind of thing. And my trading was pretty nuanced. So what I did was I basically took what I found to be the most simplified version of what I was doing in the same using the same tactics, and I was able to create a rules-based version of that had very similar results, and that's where the A14 kind of came about. So again, it's a high probability market neutral strategy. So there's no need to pick direction or be like, technical analysis guru or anything like that. It's just, same kind of thing, very consistently putting it on every week. Again, it's suitable for small or large accounts. And I created it to be very simple. Now, I don't know if any of you, I'm sure there's quite a few people out there that know a lot of my other strategies, and they tend to be combinations of various spreads. And there could be, through 2 or 3 or 4 different spreads that then get adjusted throughout the life of the trade. So I wanted to create something a little simpler than that. And that's kind of how I was trading, things that were a little simpler. So basically, this is a lot simpler than a lot of my other strategies that I have out there, which are, they're still great strategies, but this one's even simpler. So basically on order entry, there's one order instead of having to have a combination of orders. As far as adjustments, I only check for adjustments once a day in the rules for this A14 strategy. So if I'm going to do an adjustment, it's only done one time during the day. And if my target profit is reached, again, this is a very short-term trade. So anytime my target profit is reached, no matter what time of day or what day it is that I've had the trade on or how many adjustments I've done, I'm going to, exit the trade at any time. So very simple things to watch for. Just target profit, one-time check for an adjustment, and again, a very simple order entry. And again, a very short term, most of the trades are usually closed within 8 days. And that includes weekends. So I think it's just 8 total days, not just trading days. The planned capital is for what I consider to be the smallest size would be appropriate, would be like a 2-lot trade, so 2 contracts. And that's usually going to run around $5,000 to $8,000 of planned capital, depending on the volatility of the market at the time. So usually the minimum account size is a little bit of a buffer, so somewhere between $9,000 and $10,000. I think a $10,000 account is probably large enough to trade this. My profit target is per trade 5% or more. The maximum is the average has been about 6.5% over 2021 and 2022 so far. The max margin is what I'm talking about when I say 5% target. So I'm actually targeting my profit based on the margin that I have in the trade. So how much is the maximum margin that I'm using in the trade at that time? Reg T margin, not portfolio margin. Losses, they tend to average around 6% on a loss. It's a high probability, so there's not too many losses, but there are going to be some losses. They're generally under 10%. The average is around 6%, or it has been around 6% over the last little over a year. And occasionally there can be a little bit larger of a down of a loss, a kind of an outsizer. But then usually when that happens, the volatility is up, and then you'll have some outsized gains as well that can kind of make up for that. So, and again, the win-loss expectancy is pretty high, so it's about a 9 to 1 win-loss expectancy. So again, that's obviously, how it's done over the last year. So now let's take a look at what's been going on in 2022. So this chart right here is of the SPX, which is my preferred vehicle for trading this strategy. And this chart represents the SPX just over the last 2 months. So just January and February. And I think this is as of couple days ago, I took a snapshot of the screen. So actually, I think I did this yesterday. I don't know why it says 222.28, but so anyway, as you can see, these candles are pretty long. I mean, there's a lot of like, pretty big ranges here of, like 100 points range is, pretty typical in a lot of these candles, which is that's over a 2% move in the SPX. So we'll have something where we might, move anywhere from 1 to 2% in a day, or have a big range of about 2% or more. Well, from top to bottom, it might be, there might be a large wick. So it's quite a bit of movement going on. This pink solid line here that's kind of jaggedy that's overlaying is the VIX. So as you can see, we've had some like lower volatility to start the year a little bit, and then we really spiked up towards the end of January, and then we kind of came back down, and now we're kind of spiked up again with all the stuff that's been going on. Obviously, we've got a lot of stuff going on with the Fed, and now we've got this war in Ukraine with Russia invading Ukraine, and so obviously a lot of things going on that are kind of pushing the markets around. Not to mention we've had a succession of years of just extreme one market high after another. So some profit taking, I'm sure, as well. Things getting a little bit lofty. Things got bid up a lot during the COVID stock, or whatever you want to call them, COVID stocks, or things that are are obviously getting boosted up a lot higher than they normally would have. So a lot of stuff going on in the markets right now. So it's not unusual to see this. Actually, I'm surprised it's not anymore, but definitely in correction territory. But even with this A14 strategy has done really well. And one of the things that I think people don't understand is that in these higher volatility environments, this strategy, the way it's set up with the broken wing butterfly, actually can do really, really well in a higher volatility environment, especially once you get to that higher volatility, then you actually have a lot of benefits. And you can see that in just just based on just the rules, just the basic rules of the A14. If I didn't do any nuanced trader's choice at all, this is taking a $50,000 account. So I'm doing 10 lot trades. So about, 5 times larger than the smallest one, right? But I usually do like 10 lot trades for the examples here. And for that January and February period, there were 8 total trades that were closed. I just, there was a 9th one that we'll show you today that just would have been closed today. But just for those 8 trades for January and February, and then you saw how wild the markets were. We went from a high of 48.18 all the way down to, I think we got all the way down to like 41.50 at one point. And again, these big candles that are moving up and down, and some sharp reversals as well, right? But still, even with that, 7 wins, 1 loss. And in this case, because of the high volatility, I'm actually able to get out earlier than, usual is about a week. And lately it's been like, 3-4 days, I can exit these trades. So the volatility has actually been pretty helpful, and pretty decent size winners compared to the losers. So it's doing really well. So what I wanted to do is I'll answer some questions, and then I want to go through I'll just check real quick what your questions are, but I want to go through some recent trades during this period, and then answer some questions. So Tom Henley says he's probably talking about when I mentioned the fire. I don't see any smoke coming over my head. I don't see people leaving their driveways, so I think I'm okay for now.
SVS, do you adjust by delta or by feel?
I don't know. It's not a delta. It's not adjusted by Greeks. It's not it's more a position than the Greeks. Like I said, it's a very short-term trade. One thing about adjusting by Greeks is a lot of the different platforms that you use, whether you're using Thinkorswim or if you're using an analysis platform like OptionView or OptionNet Explorer, when you're looking at one contract, the Greeks will be about the same, but when you're combining and you have multiple contracts, and maybe you have like a condor or a broken wing butterfly or something where you have like 3 or 4 legs of something, then the Greek, and then they get added up and they don't necessarily match from one platform to the other. So this particular strategy is not looking for a specific delta. So you can tell when it's getting out of whack though. And that's all taught in the workshop, which we'll talk about at the very end. All right, so I don't know what this Q&A. Oh, there's one in German, if you can reach that. If you can read that, Tom. I don't know if that's.
Oh, I don't see it. It must be
It's in the Q&A.
Oh, in the Q&A. Okay. Well, I'm not really much with German, so.
Okay. Okay, so let's take a look at some of the recent trades that made up this chart. Obviously, we had the one loss there, but it did pretty good over that period of time. So with a $50,000 account, so it's up, about a little over 10% for 8 trades. So the account itself, each trade was, targeted at 5% of margin. So usually I only use about half. I try to use, obviously less than the account size, but maybe half of the account size, or maybe after adjustments it might build up to 2/3 or something like that. So let's take a look at this trade. This one was expiration January 28th of this year. And here's the beginning of the trade, just a single order of a broken wing butterfly. And this was on the 14th of January. We're at 46.47 in the SPX. And later that day, I made an adjustment. Like I just checked it one time during the day. And I added an adjustment and I just kind of widened out the tent quite a bit. So we're just kind of in the middle of the tent. And then the following Monday, after the following Tuesday, because this was a 3-day weekend, the market was down almost 2%. So I did make another adjustment. So there's the trade there, but we're, still doing fine, even though we had a 2% down move only after a few days. And then the very next day after that, it reached my target profit, in this case showing 6.6%. And so I took it off. And I just look for a small profit. So some people want to stay in longer and are willing to do that. Because these are such short-term trades, they do have some gamma risk because you're getting close to expiration. So I like to take them off as quickly as I can and just bank the profits and not worry about it. So that's the first trade. Let's take a look at another one. This one is 11th of February expiration. Again, very flat entry, simple entry on the 28th of January in this case. And then the end of the day, we had, we were at 43.08 and we went up almost like 90 points by the end of the day. And the trade is still totally fine, but I did want to widen out the tent, I should say. And then the following Monday, I was able to take profits. It surpassed my target profit, and I was able to take profits really quick, 7.2%. Obviously, that's before. I think only includes the commissions on one side, because I do include commissions on these. So, but in one, I think I've only got it to include commissions on one side instead of round trip on that. So be slightly lower than that. All right, the next one is the 25th of February expiration. Again, a nice flat entry. We're definitely in higher volatility times, so it actually helps with the entry. You get a wider net. It's even flatter than it would be in a lower volatility market, which is really nice. And in this case, by the end of the day, from where we started, by the end of the day, we're down about 85 points. So we're down over 2%. We're still doing trade still fine, but I do want to widen out that net. So I do want to make a little bit of an adjustment. And then the following Monday, I'm already able to take profits. Again, that's 7.3% there. This trade, the 4th of March, 2022. Again, a nice simple entry, nice and flat, pretty cheap too. Again, higher volatility, it's going to be cheaper, believe it or not, instead of more expensive as far as the risk to the upside for these broken wing butterflies, and see what happens. In this case, the following Tuesday, so we were at 43.70, and then a couple days later, 43.21, we had gotten all the way down to, it looks like about 42.70 that day, but was able to take profit pretty quick. This one didn't have any adjustments. I was able to take a profit, about 7.9% less slippage commissions there. And then finally, I do want to mention what would have been in the current trade, which would have been closed today had I, but I did take a screen grab of the trade at the end of the day, like 1 minute before market closed today. And this would have been one that would expire March 11th, 2022. And it looks like it had an adjustment. But even with the crazy stuff we've been having lately, and if we look at a chart, let's just go to Thinkorswim here. Just look at the SPX, a daily SPX. And just in the last, so what are we on, Wednesday here? So we've had, let's see, 4,300 to 40, like 90, that's a 90-point range, a little over a 90-point range here. This one's probably about a 70-point range, 90-point range. These are pretty big ranges. So we'll start out the day maybe down, and then we'll come back up, vice versa over here. So kind of some pretty choppy stuff going on. So even with the choppiness of these pretty big moves, that trade was able to handle with one adjustment and able to be taken off within, 4 or 5 trading days. If you add the weekend, then I guess that would be like, 6 or 7 days, but for a nice profit. And again, these, they can be kept on longer, but, just the basic rule set says to take profit. So that's kind of what I do with these, is try to take a quick profit on these. Let me take a look at some questions here. When will this start? Alert. So this is a workshop that I did, and we'll talk about that in a second. So I'll be able to answer your question. How many times do you make adjustments? I only make adjustments once a day. So if it needs it, I look at the end of the day. If it needs an adjustment, I make an adjustment, and that's it. Is that a debit or a credit? I don't know what that means. Most of the trades are done for a debit unless you're closing it. Can you set profit target for the trade to close it out? You can, especially, it's much easier when you just have one, before adjustments. You can always put in a good till cancel order for, a target profit for your open position. Can you show us the SPX so we can see the market moves when you traded? Thanks. Sure, I'll pop that up again real quick. So actually, let's go in here. So I think, so basically, all 8 of those trades, and I just showed 5 of them, or actually there was 9 trades total, but all of them, except for one, were profitable. And I think the first one started on 12/31 right here. And then this is the market moving during that whole time of all these trades, right? So, so you've had, some pretty decent moves. And again, these candles are pretty big. Most of them are, 100-point range or more. So let's see. Yeah, this one's almost a 200-point range. So a lot of activity going on, a lot of choppiness and a lot of volatility. But once you're in that high volatility market, these things just perform really, really well. So I know a lot of people are uncomfortable with higher volatility, but that's when these types of tactics can actually do really well. They do well in low volatility. When you switch from a low volatility to a high volatility, you can have that's when you can have maybe a loss. And it could be an outsized loss. But once you get up into that higher volatility, you're usually going to, usually you're capable of making outsized gains that make up for any outsized loss when you first get into that market. And since they're so short term, a lot of times the way I trade, my personal preference is to get out as soon as I make my target profit. On occasion, I'll stay in a little bit longer. But if I do that, a lot of times I'm not in the market very much. So maybe I'm missing I could be missing a lot of the market movement because I'm not in the market every single day of the week for every single trade. These are 14-day to expiration trades, Edward. 14-day, there's another one. Yeah, most of the time, generally these are, on entry, I don't trade by delta. Like I'm not going to look at a certain delta and make an adjustment or whatever, but I do like to make these neutral on entry. So I try to have a very neutral trade, and just the nature of the setup, it's going to be pretty neutral in nature as far as delta is concerned. Mateo. And I do plan on doing alerts for this at some point, but right now I just have the workshop. Do I work with Stephen? I'm not sure if you mean Steve Gans. He was one of the students in the workshop, and we don't work together like we don't have a planned workshop or anything going on together, if that's what you mean. But he's going to be launching something of his own, I think, not starting next week, starting in April. So look out for that. Chad, if you're a student, ping me after this, and I can take a look at what you're doing there. We might just have different strikes. Do adjustments increase margin and gamma risk? They tend to increase margin, yes, but I don't do there's not a lot of adjustments, and I don't keep them on for very long. So, and again, that's all explained. So I have a very limited management of adjustments so that they're not, in other words, you're not having to get into the trade for, let's say $1,000 margin. And then by the time you're done with them, 5 different adjustments, you're up to like, $10,000 margin. It's nothing like that. It's with the adjustments, the margin is fairly tight. So the initial adjustment will increase the margin. And then after that, it should stay the same. We're very, very close. Henry's saying you had to do adjustments today. Yeah, you might not be following the rules exactly, Henry. Again, you can ping me and or email me afterwards, and I can go over that with you separately. Richard's asking, when you exit, how do you do it? It's not that tricky. Yeah, prices bounce around, but you just get familiar with it, and you just kind of watch prices, and you just put your orders in to where the price tends to gravitate to, and you can get these things off pretty quickly. I trade over 100 lots, and I don't have a problem. And I usually do it in little increments, like I'll do 20 at a time, that kind of thing, so that I can, get it, just kind of go back and forth if I've got a couple different orders in, and go kind of back and forth. So it just takes a little bit of experience, I guess, with it. Lawrence Smith is, if you buy the workshop, will I be able to do it? All the information is in the workshop to be able to follow the rules, trade the strategy, learn about how it's done. Your own particular skill set, I guess you would know better than anybody. If you're,
Well, there's also a really active forum that's only for the A14 customers
yes.
too.
And I'm gonna go. And anybody who's a student or already a subscriber to that workshop and has a particular question about something, just email me separately at amy@arrowmere.com. My profit line, yeah, you can put in a contingent order or a conditional order to get out with a certain profit. I usually do alerts and then I just exit, or I'll look at the market, a little bit in the morning, a little bit in the afternoon, and I'll just, make a decision manually, but that's just my personal preference. Again, I aim for a 5% max on margin, max margin used for my profit target. If you haven't made adjustments and are getting a better price after a few days, would you double down? That's personal preference. I mean, if you feel like you can do that and that's going to help your position, that's a personal preference. I never do because it's just so short term of a trade. I'm usually in and out pretty quickly. You're welcome, Chad. I'm glad you enjoyed the workshop. So with that, it looks like I went through all the questions. I hope I didn't. If I missed anything, just again, send me an email, amy@arrowmere.com. And for anybody who's already subscribed to the workshop and you had a specific question about something that you're doing, send me an email. There's a couple in there that looked like, it didn't look like maybe you were following the rules or not sure. So definitely want to help you out there. But for those who don't have the workshop, it was done live in December. Now there's all the recordings are there. So for anybody who wants to learn this particular strategy, the workshop includes all the core concepts of the A14 weekly broken wing butterfly tactics that are used. Includes all the rules and guidelines for this particular strategy, including entry, adjustments, and exit. There are several, quite a few actually. I think about, I don't know, I want to say about 25, 30 maybe. Don't quote me on the number, but something like that. It's a pretty big number of step-by-step examples of how the A14 is traded in up, down, and choppy markets. And I go through them step by step and explain exactly what I'm doing there, how it follows the rules, and so forth. There are additional adjustment options that can be used, and those are explained in the workshop as well. For those that trade the boxcar, the boxcar might be changed a little bit, but you can use some of the adjustment strategies that are used in the A14 for the boxcar. So for those that trade the boxcar, you have another way of making adjustments. You might be able to use some of the strategies that we use in the A14 to adjust a boxcar trade as well. Again, all the classes have already been recorded, but they're all available for replay. So if you sign up, you can rewatch them at your leisure. And there is a bonus class that I just did last week with all of the subscribers, the existing subscribers, and that was to review all of the 2022 trades in January and February. But with that, instead of the way I did it here, because as we're subscribers, we actually went through every single trade from January to February 2022, and I went through every single, all the strikes, the adjustments, the thinking, the rules. We went over the rules again, kind of clarified a few things. I had some tips about exiting a trade, and some other things in there that were really helpful, as well as answered quite a few questions. It was a live Q&A that was done last week. So that was recorded, and that is also included in the workshop as well. And I think there's a couple extra bonus videos in there, like how to use Thinkorswim. If you don't have OptionNet Explorer, how to use it as a analysis tool and things like that. So if you guys are interested in all of that, it's just a one-time payment of $297 right now. And you'll get all that recorded information. And to sign up, you would just go to www.aramir.com/A14. So a real simple login there.
Actually, you don't even need the www.
Oh, okay. Just aramir.com.
Yep, aramir.com/A14.
And it's a one-time payment. It's really great strategy, I think. I'm continuing to trade those tactics. I have very nuanced trading, so that's why I created this, is to make more of a rules base so people could follow, as opposed to trying to understand the nonsense that's going on in my brain on a daily basis. But I do plan on having some kind of trade alert service in the future, but just not right now. I'm just really busy with some other things. And I think that, everything's laid out pretty clear in the workshop. So I think you guys, and there's also one thing that I didn't mention, and I should have added it here, is the forum. So subscriber forum, specifically A14 traders. So you actually have a separate private forum. I guess I should call it a private forum that you have access to. There's a link there that you can, talk with other A14 traders, and that's been really helpful for a lot of you. So that exists as well. So it's another extra. I don't know if I've missed anything else out, but
I've seen a lot of positive comments too about the A14 from the people who've gone through it. So
yeah, there's quite a few people that I've been getting some really, there was a few people that looked like they were struggling during the higher volatility, or they were afraid to trade during higher volatility times, which is why I did that bonus video. So hopefully that helped them out. But for most of the people are just having a really good time with it and doing really well with it. So I'm really pleased to see that. Yes, it's very scalable, Lawrence. It's I trade it in SPX, and like I said, I do things a little bit differently because I have more of a nuanced style of trading. But I'm trading over 100 contracts, and I plan to build that up to 2, 3, 4, 500 contracts at some point. So yeah, SPX is pretty liquid. You can trade this in the SPY. You just have to check your commission, your commissions expense per contract versus how many, obviously, because it's 1/10 of what the SPX is.
you could probably even do it on ES futures options, I imagine.
Oh, here's a great, Chad, hopefully I can use this as a what do you call it?
Testimonial.
Testimonial. Thank you. I don't know why my brain is, maybe it's the smoke coming over here right now. As a testimonial, Chad, if you let me use that as a testimonial, that'd be great. He says, it's the only course I ever bought that paid for itself in the first month.
All right, there's your permission too.
There we go. Thank you very much, Chad. I appreciate that. That's great. Let's throw that on there, Tom. I know you're the wizard at putting things together pretty quickly.
Yeah, I'll do that.
I have a bunch of other testimonials from other courses, but I've actually gotten a lot of emails with some really positive remarks, and we can probably put something together for people there. But let's see if there's any other questions. I don't know where I left off.
I think that's it so far.
I think that's it. Thanks, Amy. I don't have one. Just toss. Toss always doesn't always display the margin. There's a way to look at the margin. So let's just, I'm going to just show somebody real quick because I don't know if it's covered. I do have that video that shows in TOS what how you can use TOS to the analysis tab to, here's just perfect. I'll just go here. So here's a
Steve had a good way too. Just take your debit times 1.05 and that's your profit.
Yeah, but what you can do, just as a quick little cheat thing, is if you have a position or positions that are built in the analyze, you can go over, let's say, obviously to the right, you can see the pink and the blue, right? The blue is or the cyan is the expiration date. So if I come over here, I'm showing, $33,000 risk to the upside, and to the downside, I got $133,000 risk. That's 100 contracts. So let's say it was 10. Oops. Let's see, the 13,500 in this case. This is not I think this is a little bit wider than the typical A14. This was a leftover from last week that I just had sitting here, that I didn't remove because I usually use one. But anyway, so that's how you can tell that. Let's see, thanks. I'm jealous. What is going on? Lawrence, Chad, yeah, give him a call. And Lawrence, you can ping me, send me a text and figure out what's going on there.
And that's one thing you can do in the forums too. If you have a
Yeah.
position you're struggling with, just paste it in the forum and ask for advice.
Yeah, exactly. I think, one of the things is what I find, and this is not for just this, any strategy that I've been teaching for a while, is that people tend to either under adjust or over adjust. And we all do it. It's like sometimes we get emotional about stuff. We're watching the markets and we get really emotional, and we tend to just either over adjust if we're watching the markets, or under adjust and just kind of hope that everything works out. But both of those situations are not ideal, obviously, unless the market just happens to react the way you really need it to, when you really need it to, which doesn't always happen. So that's obviously why there's rules to some kind of guidelines that are put in place for these strategies. And if you follow them, you're not every single trade is going to be a winner, of course, but they tend to keep they're created to try to keep things in order and out of trouble. Hopefully those things help, and it seems to be helping a lot of people. I see some questions in the Q&A. Can one manage adjustments with a good tool? Okay, we talked about that a little bit. I like to manage like I said, I'm only looking at adjustments once a day. So, I mean, you could kind of, but not really. I think it's better to, in this particular case, if you manage an adjustment with just looking at that one time of day and deciding what to do based on the rules. It's pretty simple. I think it's probably the better way to go, Lloyd, for this particular strategy. It's just too short term to, leave to chance. Would you ever position it bullish or bearish based on trend? You can kind of adjust. The rule set is just neutral, but you can shift things bullish or bearish based on trend to your, what you think the trend might be. Right now, we've got a lot of chop, so it's kind of hard to tell what the trend's going to be. So, and yeah, the trade works in lower volatility. If you go, let's just take a look at the chart. Let's go to, why is this in my way here? Chart. Let's go to the SPX. Okay, well, let's go look at, okay, 3 years. And let's add the VIX on top of that, so we can see what the VIX was. Just a way of doing that. Okay, so this little purple line is the VIX going up and down, and then the candles are the SPX, and then everything else is just moving averages, basically. So as you can see here, obviously we're in a higher volatility market right now, where, the VIX is at about 30, but down here, the VIX is like about 16, which is just typical. So there's lots of times when the VIX was lower. Obviously we've had a little bit higher volatility starting in 2020 with the COVID and everything, right? We've kind of been in an elevated, not super elevated, but in a more elevated volatility environment since then. But if I go back to 2019, I have gone back and back tested 2019, especially since I was coming up with these trading tactics and these trying to do them in short term. I was going back and looking at 2018, 2019, when the volatility was much lower, and it still performed. It's a little more, because it's such short term. It's a little more, you don't get as much juice out of it, I should say. as quickly. When it's higher volatility, you usually get, it pays off a lot quicker and maybe a little bit more. But you also have, your lower volatility for a reason. Look at these look at the difference in these candles compared to these candles. So obviously you're going to have a narrower window, but it's not really moving around very much. So it just might take a little bit longer to make the profits as opposed to 3 days. But my average was about 8 days. And now with the higher volatility, it's about 3 days. So I'm guessing that, in here, it's going to be up higher again, maybe 10 days to get profits, but still pretty reasonably quick. And, same rules applied. I actually go through, did I go through some 2019? I went through some things I think I went back to 2019, as a matter of fact, in the workshop specifically to talk about how to deal with a lower volatility environment, what to do on entry, what changes to make in order to deal with the lower volatility environment. So I did actually do that and went over that so that people could see, what might need to be changed there. So that's gone. That's in, I don't remember which class it is, but the one of the, there's 3 main classes that go over all of the rules and all of the examples. And then the 4th class is the bonus class. But I think in either class, I can't remember if it's class 1, 2, or 3, but in probably in class 2, I think I went over the lower volatility. But it's definitely in there of what to do. And still profitable in that environment as well. I'd say the hardest thing to deal with, and this is with every neutral strategy, is if you're going from one type of market to another. So the transition from one type of market to a different type of market is always a little stressful. And then once you're in that different type of market, everything kind of settles into a groove. So for this type of strategy, probably going from a super low volatility to all of a sudden you have like one big crash or something like that the next day, that would be the one outstanding difficult moment. And then from there, it would get more, adjusted at that point. So I think that and then going from the other direction is probably not going to be it's not going to hurt as much. It's probably going to be beneficial going from a high volatility to a lower volatility. If the VIX gets crushed or something. So that shouldn't hurt too much. As a matter of fact, it probably just brings in more profit pretty quick. So I think that's it. If there's no other questions. And again, if anybody's interested.
Oh, did you see the one with which markets it will struggle with?
Yeah, I just answered that, I think.
Okay.
Well, yeah, so I just said it's usually just a struggle when you switch from one type of market to another, usually from a low volatility to a high. After that, you're pretty much, it's already adjusted into that mode and it should go much more smoothly.
If you had to advise somebody, what's the most difficult thing about the trade, if there is a difficult thing?
Well, I guess some people are going to have, just depending on your trading expertise, some people are, have a little more difficulty than others. I think, once you get used to trading complex orders, like if you're used to trading spreads or broken wing butterflies as a single order or condors as a single order, then it should be pretty easy. For people that are maybe only used to trading a single option and now they're trading spreads or a combination of spreads, that might be a little confusing at first, but I don't really see, I think, as far as the mechanics of it, that should be pretty easy. I think the only thing I can say that, really kind of is difficult for a lot of people, just because we're human, is when the emotions set in. So if the market's crashing and the things are bouncing around and you're not sure what to do, it's just like take a breath, follow the basic rules, and you should be okay. And that's, I think that's the hardest thing, is to just not let the emotions get in the way. That's probably true for most traders, whether they're experienced or not.
That's for sure. All right, Amy.
Right.
Looks good. Nice. Thanks for the update. Looks
Oh,
like
you're welcome.
did fine the first 2 months, even despite the crazy market. So
Yeah, and I
well
think
done.
we got started in December. In December, November and December were really good too. So, but that all the reason why I didn't cover November and December in this particular meeting is just because that was actually covered in the class in the workshop itself.
Right.
So actually, I think in the third class, I went through every trade in I think November, December timeframe. If not, I think I did all of them. If not all of them, most of them during that time to cover that, because that's when things started getting a little weird, right? Where the market started getting a little choppy was started in November last year.
Right.
So that was all
And
covered.
Henry, I guess just send Amy a message about your 11 March trade.
Yeah, send me a message. I saw a couple of those and like, yeah, that didn't something didn't look right in one of the some of the strikes that I was seeing there, like 4 different strikes, and something didn't look right. So definitely send me a message and I'll do my best to answer that.
All right. Well, why don't we wrap this up? I'm traveling, so I'll probably get this recording done maybe tomorrow. I'm driving to Germany tomorrow, so
Oh,
it's gonna
okay.
be a
Well,
long
safe
day.
travels.
Yeah, and I'll
Travels.
be back home next Monday, but I'll try and
Okay.
get this done as soon as I can and get it posted on YouTube.
Sounds good. Thanks, Tom. Thanks everybody for joining.
Thank you. We'll see everyone.
Bye-bye.